If we should take all the monies in the world and gather it at a place and call everyone in the world and give us the same amount of that particular money, by 2 weeks' time, there will still be poor people and there will still be rich people. We wouldn't have been differentiating savings from investments if not for inflation. So if you are saving to buy this for 10 cedis tomorrow, by the time you save 10 cedis and go to the market, it won't be 10 cedis. So the purpose of investment is to beat inflation.
Hi everyone, welcome to the second episode of the Entrepreneur Spotlight. On our previous episode, we talked about how to transform your passion into a career. If you missed it, please do check it out. Today, we're going to talk about personal finance and wealth management, and we are being joined by a thought leader in personal finance with expertise in asset management and financial advisory. With experience in top-notch financial institutions like SIC Financial Services Limited and Echo Capital Investment Management Limited, he has also shared his insights on various platforms, including TV3, ZFM, ABC TV, and GTV. As the CEO of Personal Finance Hub, he empowers individuals and businesses towards financial success. He is in the person of Mr. Sam Kobi Hagan. Thank you so much for joining us, Mr. Sam.
Thank you, Jessica. It's an honor to be here.
Yeah, you look good, and it's really good to have you. Okay, so recently I saw a post of yours on WhatsApp, and I think it was talking about, how poor people, average people, and rich people manage their money.
Yeah.
And I think it was saying that poor people just spend their money on, daily bills, and then the average people just get credits to, buy more.
Yeah.
And then the rich people buy assets.
Yeah.
Can you talk a bit more about that?
Okay, so this is how the quote goes.
Okay.
So I was just talking about the fact that the poor thinks that the purpose of money is to pay bills.
Right.
So you see a lot of people, especially in Accra here, thinking that the reason why they have to work, the reason why they need to get money is because there is a bill that they need to pay. And then the average class thinks, or the middle class thinks, that the purpose of money is to obtain credit in order for them to have what they want. And then the rich, which there are little people there, that is, they think that the purpose of money is to buy assets, so that the assets can get them more profit for them to run with. Yeah. So it's unfortunate that most of us fall between the poor and the middle class. Because if you ask someone why he or she is working, the first thing the person might say is that I need to pay bills.
Yeah,
If
that's
that's
like
the
a primary
purpose,
reason.
yeah, it's not bad. But if that's the purpose for you getting money, or that's how you see money, then you're not going to go further, like getting assets.
Yeah.
So assets are actually anything you buy that gives you money.
Yeah.
I was on a platform and I was discussing the fact that unfortunately most of us here are buying liabilities.
Wow.
Anything you buy that doesn't bring you back money is a liability. Yeah. I have a brother who had an iPhone.
Okay.
And then he said the iPhone space is not enough. He's going to get a tablet. And I asked him what's the purpose of a tablet. And he said because he needs more space.
Wow.
For what? Because he needs to download certain videos that he needs to watch them. So those videos are you're just going to watch them. They're not going to feed you
generating
anything. So with that one, we can say that it's a liability. So I always ask this question, that the next thing you're going to buy, what you want to buy, is it a liability or an asset? Unfortunately, if you have a discussion with the rich or the high class, you will see that they don't matter about buy me Coke, buy me shawarma, buy me. They don't matter. They don't think about those things. The rich is thinking that they want you to buy them things that will generate more money for them. For example, you have a conversation with someone who wants to get a shop, employ someone, put things in the shop and sell. That same friend or that same person will have a friend who will tell you, give me that money, I'm going to use it to buy maybe a hair. I'm going to use it to exactly. So those things are not going to give you money, unless of course you want to tell me you are a hookup lady who use that particular hair to generate some funds for you. So it's the purpose of money. If you have that orientation, that the purpose of money is to generate more money, everything you do with your money. I have a friend who says that he's not working, he's not on a payroll. And so when I meet him, I ask him, Charlie, what's up? How is it going? He says that what he's doing today with the little he has, he knows that it will generate something for him tomorrow. So he has 10 cedi today. He knows that he will spend it in a way that the 10 cedi will give him 100 cedis tomorrow.
Wow.
So how your orientation about money puts you whether at the poor class, middle class, or the rich class.
Okay, so now let's dwell on the orientation about money you mentioned. I think you mentioned that a lot of people fall in the category of the poor and the
middle,
right. So what do you think their orientation of money is that makes them fall in that category?
That's the expenditure mindset. The thing that money is supposed to be spent. So that's the orientation about money. They don't know that money is supposed to generate more money.
Okay.
It was Dangote who said that it's sad. Money is a very diabolic substance that today you have it, tomorrow you don't have it.
True.
So if you have it today, you should know how to manage it in a way that what you have today will generate more for you. So unfortunately, those in the middle and the poor class have the spending mindset. Anything they have,
they want to spend.
Like those days when we were young, say Christmas banner say yeah, mama mo rice ni Johnny fridge money idea. We want to finish it
today. It must finish.
Unfortunately, that's how the poor people think, or the poor mindset thinks that money is supposed to be spent. And I don't have issue with the spending. There's a spending that gives you more. There's a spending that takes away. You get it? I for example, buying fuel to go to club, have fun, come back home. Buying the same fuel in the same car, going to work, you get something. So we both spent, but I'm getting something from what I spent.
Right.
Yeah. So there was a saying that unfortunately, if you should take all the monies in the world and gather it at a place, all the monies in the world, gather it at a place, and call everyone in the world and give us the same amount of that particular money. So let's say we here are the only people in the world, and let's say we are 5.
Yeah.
And the whole money in the world is 5 million. So call all of us, give us 1 million. By 2 weeks' time, there will still be poor people and there will still be rich people. But it was shared among them equal.
It's really on what they spent it on.
The mindset.
Okay. Wow.
The spending mindset.
Okay, so as a financial coach, what would you say is one of the money habits you've developed that has helped you build financial stability?
The first one I would say is the saving or investing before spending.
Before spending. Okay.
It has become a part and parcel of me. That I know that there is a seed in every money I get. There is a seed in every money. Not salaries, though. Every money I get.
So what I give...
So if you give me money, there's a seed in it. I make sure that there's part of that money that I will save.
Wow.
So the first thing I do is that any money I get, I invest before I spend. So you spend what is left after investing. Not spending when the money is getting finished, then
I have to invest.
Let me call some. What is some? What should I buy? Gold or treasury bills or stock? No. The first thing to do is to invest, save before think of spending. Because come on, we are going to spend until we die. Yes, we're going to spend until we die. So please make sure you put spending at the last phase of your budget. The first thing should be investing. And the second thing is the discipline aspect of it.
Okay.
You know, it's sad that a lot of us want to invest, a lot of us want to put money aside, but we don't have the edge, we don't have the discipline. And I've been getting this question a lot. How do you develop the discipline? You understand? And the easiest way I answer this is that I believe that anything you do continuously for more than 21 days become a habit.
Yeah.
And when it's a habit and you keep at it, then you are disciplined. You're disciplined to that habit. So if you want to become disciplined, it means you have to start and then you keep at it.
Okay.
Start today and then you keep at it.
Okay. Yeah. Well, so growing up, there was this culture of susu box our parents introduced to us, right? So then, like you're saying, mommy gives you money for school, and it's just like with some 1 CDB, you go and put it inside, accumulating everything. And when it's our day, then you spend everything. So some people have grown up with that mindset that, okay, they say we should save, I'm saving. But then they have an end to that saving objective. So I want to buy this dress, I want to do this, I want to do that. So they feel like I'm saving, but you went beyond saving to investment, right? So can you talk a little bit about the investment aspect so that those with that kind of mindset will move past just saving as in the shoebox, accumulating their money to realizing that, okay, I need to put this money to work so you can get money from me.
Wow. So, Sika, that's a very laudable question. We wouldn't have been differentiating savings from investments if not for inflation.
Okay.
So, this beautiful mug here or a cup here is, let's say, going for 10 cities today. Tomorrow, when you go to the market, it's 12 cities. So, if you are saving to buy this for 10 cities tomorrow, by the time you save 10 cities and go to the market, it won't be 10 cities.
Yeah.
It will be 12 cities because of inflation.
Okay.
So saving is just putting your money somewhere and going for it. It's like you save the person, you save it. Save it. So just putting your money somewhere and going back for it. But investing is putting your money somewhere. We say putting it in an asset that will generate money or profit back to you. So that profit you get will help you cater for the inflation, the 2 cities in the car, 10 cities in the money. So the purpose of investment is to beat inflation. Yes.
Okay.
So it's sad that people are, this as you said, people are still having the mindset of saving.
Yeah.
Oh, you can have that savings account more
in
a bank, and they don't want to invest. And they feel when you say they should invest, you are pushing them to the wall. You are asking them to put their money in some danger or some risk. No, we are just helping you to fight inflation. The thing you want to buy at 10 cities, tomorrow it will be 12 cities. So put your money somewhere that it will grow so that you meet up the 12 cities for you to get the thing you want. So saving is different from investment.
Okay.
Investment is putting your money into assets that will generate more profit for you. The downside is that because investment is making your money work for you, definitely there will be some risks.
That's true.
You might end up not getting all the interest you want on your money. You might end up eating into even your principal, your capital. So the risk comes with it. But because it's an investment, there has to be a risk. Yes.
Okay, so you mentioned assets. Let's talk more about investment portfolios that we have. I'm sure there are people who have heard a lot about investment, but they have no idea of the investment portfolios we have. So let's delve into that.
Okay, so I'll term it as investment assets.
Assets, right?
Yes.
Right.
So let me break it down this way. We have 2 markets where you can get these assets. So just like going to the market to buy something, there are 2 markets where you can get these assets. So I want to categorize these 2 markets. So the first one is the fixed income market.
Okay.
And this market is where you get assets such as treasury bills, commercial papers, bonds. We have government bonds or corporate bonds, so forth and so so there are a lot of them actually. So what makes it fixed income instrument or asset is that they have fixed duration, and then they have fixed interest. So for example, treasury bill, for instance, has a fixed duration. We have 91-day treasury bill, 182-day treasury bill, 364-day treasury bill, and they have interest attached to them. 91 days going for maybe 15%, 182 is going for 16%. So all this has one fixed interest rate and then fixed duration. So it makes it a fixed income asset. Fixed income asset. Same applies to commercial paper. Same applies to bonds and all other fixed income assets. And then we have the stock market.
Okay.
The stock market has what we call shares. So Sika, you have a company, and I would like to buy into the company. And then when the company performs well, I make profit. When the company goes down, I go down with you. When you break even, we are all breaking even. So another market is what we call the stock market, where we have companies that have been listed on the stock market, where you can buy shares and own part of the company. All these ones are good, but we also have the one called the alternative market. Today we have such as the gold, that's the alternative market. We also have what we call REIT, the real estate investment trust, that's a REIT. So you can't just go to the broker and buy a house and flip because you don't have the money.
Yeah.
So you can buy a REIT. It's a form of a mutual fund where your money should be used to invest into this real estate for you. And then, of course, we have mutual fund itself, which I always advise for beginners, people who have no idea in the market.
Okay.
So mutual fund combine any of these assets I've spoken of, then it's being managed for a group of people. So we call it collective investment scheme.
Okay.
For a group of people. Yeah. So basically, these are the assets we have under investment, and then each of them has its risks. Each of them has its perspective, as in their return attached to it.
Yeah.
Depending on their nature and then their the way it performs.
Yeah. Okay. So when we hear about investments, a lot of people talk about risk appetite. Could you please throw more light on that?
Yes. So as a registered and licensed investment advisor, we are being asked by SEC to do 2 exercises before we recommend any investment for anyone. The first exercise is to assess the risk tolerance of the individual or the prospective client, and this is to help us know where to put his or her money. So I begin by asking you that, for instance, we are on this show, and if you receive a message right now that sorry to say, maybe because of the rain, your little sister has been taken by the water, how would you feel?
Oh, that would be a very huge blow.
Yes.
Very huge one.
Yes. So there are someone would feel very bad and start crying immediately. Someone will feel sad, but yeah. So all these questions we ask clients for us to know whether they can take risks, or they can take a bad news.
Okay.
To know where to put your money. Yes.
Okay.
So that's the first thing to do, and then the second thing is to get to know the objective of the client.
Okay.
So why do you want to invest? That will also tell me where to put your money. If you want to invest for a short term, Sam, so I want to pay my fees. So a client contacted me that we're on vacation. I've received my school fees. School will resume next 3 months, but I want to put it in an investment asset so that before school resumes to pay their fees, I can get something.
Yeah.
That's smart, right?
Yeah.
Yeah. So I told him, okay, because school is resuming in 3 months, I can't buy shares for you. I can't buy gold for you. Let's do treasury bills.
Treasury bills will work, yeah.
Because treasury bill is short term in nature, and it has low risks. So these questions we ask about your objective and about your risks help us to select assets for you. Basically that.
Okay. Wow, fantastic. So a lot of people, when they see successful people like you, it's almost like everything went very smooth for you. You have very amazing financial lives. You never made any mistake in terms of your decisions. Let's talk about the downsides. Have you ever made any big financial mistake that, looking back with what you know now, you'd say that you wouldn't have done that? And what would you use, to tell people in terms of that knowledge you have now?
Okay, I'll talk about 3 of them.
Okay.
The first one is in 2019 or so, I had less knowledge about investment.
Okay.
So a friend introduced me to crypto. My first time. And we are on a platform where you start with 100 CDs.
Okay.
So we have time durations that the traders will come on the platform. They will tell us to go click on this, click on that. You have to trade this coin. You have to trade that. Then we will be trading. So from 100 CDs, I grew my money from 100 CDs to 3,000. Yes, and within 2 weeks, I had 6,000, and I became so nice. So
you felt like this is
challenge. Yeah, now we are on it.
Yeah.
Okay. So what happened was that it was a platform. We woke up the following day, and the platform was no more.
Whoa.
6,000.
So your money just went like that.
There's no one to call.
Ow.
There's no institution. We don't know the traders.
Oh, that was very risky.
That's the mistake.
Very risky.
The first mistake I will never forget. That's what even pushed me into investment.
To learn more, so okay.
Yes. So the lesson in here is that you don't invest into things you have less knowledge about.
Right.
If you don't know about it, don't invest into it. I have people who invested in men's gold. Charlie, Charlie, yes, good be about the amount sharp, and the interest rate was crazy. You don't know what they are using your money for. You don't know who is behind it. You don't know whether it is legal or not.
Yeah.
You jump in and you put your money in.
It looks appetizing. So
Yeah.
obviously.
Don't try it.
Wow.
It was very bad, So I went broke. I went down. Yeah. And it's a mistake I'll never forget. I think our listeners should also take this lesson from me. Before you invest, make sure for now you have investment advisors like myself who are licensed to give investment advices. So you can just reach
out and then
just make sure where you are investing it's a very solid place. Right. It's regulated by the necessary regulators, and it's a good place for you to put your money. Yes.
Let's talk about the two left.
The second one is back then. I spend whatever comes my way. I wasn't using the invest before spending strategy.
Okay.
So I wasn't budgeting. People living their life without budgeting. It's very common among us. Unfortunately, I've been on a lot of campuses to talk to students, and you can see that actually scanning by 2 weeks now. Then they start calling out for friends, getting into people's hostels to see leftovers and no mood in the idea. You understand? So budgeting is key. If you come to my house, I budget for every little thing. It's even funny.
Wow.
Every little thing.
And it's the little things that eat the money.
Exactly.
Small expenditure. Small.
And I was saying this the other time. I learned this from my father. You know what he did? It's bad, but let me say it. They can sack us for school fees. You call us, come. You open the door and tell you, see, there's money here. But go and tell the headmaster that I didn't budget for today.
Oh. I think he was teaching you something at that age.
I have taken that attitude actually. If I don't budget, no matter how mobile do your face, it is not on my budget. Sticking to budget is a mistake that.
So it's like you telling your money where to go.
Exactly. You know where your money is going. How can you tell me? Yes, you are doing your national service. You received 715. How did you spend it? Hey, I don't know. How? You don't know. It means you don't assess yourself.
Yeah.
First of all, you didn't even budget. Because if you budgeted, you would know where your money went. That's why I propose the envelope budgeting for every starter.
Okay. Let's talk about that.
Get about 5-10 envelopes. First one, write on it transportation. Second one, bills. Third one, food. Like just your expenses. Immediately your income comes, go and withdraw from the bank. Put them in the envelopes. Before you take money from any of the envelopes, make sure it is for that purpose.
Yeah.
If this is a transportation envelope, make sure the money you are taking is not to take someone to dinner or not to go and buy airtime or data. Because all should data rush and our airtime massa. No. Make sure the money you take from the transportation envelope is for transportation.
Then it demands a lot of discipline.
Exactly.
A lot.
That is budgeting. You have to be disciplined. And for me, for instance, at the end of every month, I assess myself. Did I spend this on this?
Okay.
At the end of the year, I do a very vast assessment on my finances. What did I say I would do? Did I do it? Do you do that for yourself? Most of us do not do that.
Right.
That's the second mistake we are doing, not budgeting, not controlling our finances. And then, of course, the third mistake is investing. Some of us are not investing at all. At all. We feel that, Charlie, this is kind of very before.
Some people also live by, let's see how the day goes. Let's see how tomorrow cries not even coming fast. Let's just see how. So they don't really have the future in mind, But I think with what you said, a lot of people have taken that into consideration.
It's very important. It makes, I used to tell my siblings that one thing that makes life is simple when you plan. It's like you sitting here. When you leave here, you know the time you will sleep.
Yeah.
Tomorrow morning, you know the dress you wear. You know the car you pick. You know the time you get to work. You know when you get to work.
You know life structured.
Simple.
Yeah.
But all their own planning, same applies to life. You are doing your service. You know when you are done, you do this. You know after service, you do this. You know you go here. I mean, life happens. That is why plan is good. You get plan A, plan B, plan C. So I don't joke with planning.
Planning, very important. Okay, so I've seen a lot of people talk about budgeting and sort of allocate certain percentages to them. So they say, let's say, put 10% aside for your tithes, let's say 20% for investing, and you know, is it really fixed, or you can adjust them based on your objective as an individual? Let's talk about that.
Okay, so it's not fixed. That's the first thing to say. It's not
Yeah.
fixed. It depends on the individual. But for beginners, it's good to start with a fixed one
Okay.
and then become very disciplined at it. So I mostly propose or suggest the 70-20-10 principle, the one you just mentioned. And that one goes for Christians who want to use 10% for tithes,
Okay.
20% to invest for the future, and then live on the rest of the 70%.
Mm.
Recently, I was at Pentecost University and I was telling them that they were saying they are finding it difficult to invest because their money is small. And I was telling them that assume that if you are receiving 1,000 cedis a month as an income or salary, assume that you are receiving 700 cedis. Assume. Then the rest of the 200, the 300, invest the 200, give the 100 to God as tithe. So live on 700 with an assumption.
So you tune your lifestyle to that.
Exactly.
You know.
So you are living below your means. You are earning 1,000, but you are living below 700 cedis. So you assume that your salary is
It's just 700.
then you live towards it. Understand? So it is not fixed. You can set your own, and sometimes we make the major expenses part large when you are beginning.
Yeah.
But when you are growing and you are building more assets, the quote you started with, that the rich class believes that they buy more assets so that they get more inflows. You make sure that, or you get to realize that your expenses portion becomes small.
That's true.
Because your incomes are many. You have a lot of income. You understand?
Yeah.
So, for example, I'm at a level where I don't use one income for one expense, like all my expenses. That you know that where I'm working, they are paying me 2,000. I'm transportation. Other source of income.
That's true.
So you are working as a banker, but you have a small mobile money shop somewhere working for you. The little you get there, use that for bills. So you will not depend on the banking salary for bills. As the mobile money shop is growing, you get some small place, you start you put someone there. That one, the little you do there, it was Olumide, no, it was Matthew Ashimolo, Nigerian, who said that if you are a Ghanaian and then you cry that you are broke, then you want to be broke.
It's a decision you made.
Yes. He said that when he came here, but see, he realized that you can set up 10 Kelewele shops.
And people will buy, you'll be surprised. If you're Juma by his tide, you buy. Just something small.
Just some nice spots. Just 10. Every month, each of them is giving just 500 cedis for a month. It's a
lot of money.
How much is it for 10?
That's huge.
5,000 just from there, from Kelewele.
That's huge.
Yes, it's possible. You understand? Beginning of the year, I gave I have mobile money business. I gave 10,000 out to someone who does mobile money, and he said he will be giving me 10% every month. This is a side thing. You don't have to, you are not actively working there. It's a passive income.
Yeah.
You understand?
Yeah.
So yeah, you can if you're able to get other incomes, you will not depend on one income, and therefore your budgeting structure will not be fixed, because you know that this business is taking care of this need. When it comes to bills, this taking care of this. There was a man who said that if you are a barber and you are living in one barbering shop, you are wasting time. He said you can go to schools, government schools, let's say senior high, pre-sec, Sec, all the sec. Go there, go and conduct a contract with the headmasters. Tell them that every Saturday you want to come there and shave their hair. You take money from them. What you get, you give him half, and you take half. If you are doing this because of that, when you contract with this headmaster, so look at the sec, all the boys will be shaving all their hair. If everyone is giving you 10 cedis, Saturday,
money.
You understand? They are doing that for 10 schools.
Wow.
So they are strategies, just that some of us.
And I think people too don't recognize the opportunities in the little things. They're looking for the huge, I mean, with what you're saying, nobody will ever sit and think, oh, I can actually do this. This small thing I can start. People are looking for the huge ones, and then it looks like they can't get there. It's really, but let's talk about other ways people can make extra sources of income, because you mentioned that it's not really prudent to just depend on the salary you get. Let's talk about other sources of income you think people can.
So it depends on what you are doing now.
Okay.
I feel that everyone should have other sources of income. An individual depending on one source of income is like a table depending on just one leg. You will always be shaky. Every time you are waiting for
just that particular
the month to end.
Oh, I see.
So no one, even the Bible said that we should have at least 7 sources of streams. I mean, you understand? At least 7. Bible said at least 7. How many do you have? At least 7. And I know the question will come as Charlie Accra say, and is you. Why we 5 time and over starting we. That is why this man said something. Matthew Ashimolo again said this, that our mindset, no, this one was only Olumide Emmanuel, also a Nigerian pastor. He said our mindset of other source of income or side hustle is different. He said that our own is what? Side suffering. Where you are, let's say you are a banker,
yes,
and then when you close from work, maybe on Saturdays, you yourself, you have to go and open the shop and sit there. You are suffering. Open small business and leave people. Take people to work for you.
It even reduces unemployment in Ghana.
Exactly. You get it. So employ people to be there. How much will you pay them? You can go to one village, set up a chore bar. It doesn't take much to set up a chore bar.
Yeah.
Set up a barbering salon.
Yeah.
Doesn't take much. Employ someone there. The little that will be coming from there, you can take it as another source of income. So source of income doesn't, multiple sources of income doesn't include you doing the whole work. Employ others to work with others. And I think everyone can have more than at least 3 sources of income.
Wow. Yes. Wow.
So I can mention some here. Let me say a provision shop.
Yeah.
Go to her and say, Auntie, please, how are you doing? I'm fine. Okay, please. Do you mind me giving you 2,000 cedis to push into your business so that every month you give me 500 cedis? There are a lot of business women out there who need a little support to expand their business. For the provision shop, for tomato seller, go to the Kilewele seller, go to the mobile money vendor. Oh, I want to give you 5,000. I want to give you 2,000. I'm putting it into your business. Every month, how much will you give? Oh, I'll give you 300 cedis. And your money will still be there. Then your money is working for you. You won't be doing the Kilewele. You won't be doing the Momo. So everyone can get more than 3 sources of income. Make your own money work for you. Yeah.
I think it also has to do with the level of trust. Because
Yes,
like you're saying, people would rather not just walk to anyone.
So you have to build trust. And besides, the business woman also there will not also take your money, but he doesn't know you.
She doesn't, yeah.
She doesn't know you. So yes.
That's true.
So you have to build trust. You have to build relationship with people. That's why we live in a society. We are in a community. You're in a church. You are in a school. You're in a company. There are people around you. You can always do something. You can let your money work for you.
Yeah. That's true. Okay, so before we continue, we want to acknowledge our partners, KJL Foundation. Thank you so much for being with us and supporting us throughout this journey. We also want to acknowledge Turmeric Hotel. They gave us this beautiful space. If you're looking out for a place to unwind and rest, Turmeric Hotel is the best place to be. My makeup is also done by Mel's Glam. You can check her out on Instagram and she do a wonderful work for you. So back to what you were saying. Let's look at mutual funds. Since you mentioned that it was very good for beginners, let's talk about it. How do they get, into that?
Okay, so mutual funds are collective investment schemes.
Okay.
So as I said, a fresh investor cannot go to the market with 10 cedis or 50 cedis and say I'm buying treasury bills. But that investor can go to any investment firm and say I'm buying mutual funds or I'm starting an investment called mutual fund. The reason is because these mutual funds are collective investment schemes that allow individuals to come with any amount so we put all these monies together, then we invest it for you. So it's not just my money, your money, his money, her money. So we call it collective investment schemes, because maybe you cannot go to the market and buy just MTN stock or car back stock or Access Bank stock, but you want to bring your 50 cedis, I bring mine, they put it in an instrument or a product. So mutual fund is a product.
Okay.
So it's a product where everyone can invest into it. So 50 cedi, 100 cedi. So anyone who wants to start with a mutual fund can visit any investment firm.
Okay.
In Ghana, there are a number of investment firms in Ghana. We have the Data Bank, we have the Eco Capital, we have the Stanbic Investment, we have SIC Financial Services, we have GCB Capital, a lot of them. So and I know most of them have the mutual fund. Go to them, just ask them that you want to start investing. And mutual funds are also have classes.
Okay.
Because someone will say that I am a low risk person.
Yeah, talking about the risk appetite.
Okay. Yeah. So there are mutual funds that invest in low risk assets like just treasury bills.
Yeah.
We call them fixed income mutual funds. Then we have a mutual fund that invests in only the stock market. We call them equity mutual funds. Then we have the mutual fund that combines both the equity and then the fixed income. We call them balanced mutual funds.
Right.
So depending on your risk appetite and then your objective, you're going for the one that will suit you. I think everyone should have a mutual fund.
Right. Yeah. Right. Okay. So before we wrap up, I just wanted to talk about the mindset, towards investment, because a lot of people, when they start investing, they're itching to get the money. They can't wait. It feels like, hey, they're running away with my money. Where's my money going to? What would you say, in all honesty, to those who are willing to invest, the kind of mindset they should have towards investment?
Okay. I would say that they should be patient enough because investment takes time.
Takes time, right?
Yeah, investment takes time. You don't expect to. It's just like building a house.
Yeah.
You don't expect to start today and finish today. So you have to take your time, and also you also have to invest at the right place.
The right place.
And then if you are not an active person on the market, have a financial advisor or an investment advisor. So wherever you are investing, there are licensed people there. Assuming you're investing at my company, I might be in charge of you. I'm a licensed person. So anytime you check up with your licensed person, ask them what's happening in the market. Is it a good time to sell? Is it a good time to buy? Is it a good time to hold? What should I do with my money? What people are doing wrong when it comes to investment is, some people is that they just say, I've invested 50,000 in treasury bills. Net the whole. On flow be and check it up. Oh, as time a mature, I'm only over. Net the no, you have to call. Please, how is my treasury bill performing? Currently treasury bills from 25th of January when the current finance minister said came to was inaugurated or came. Treasury bills started coming down. Yes. So such situation, we the advisors will call you and tell you treasury bill rate is coming down. You want us to keep it at this rate, buy it at this rate,
right,
or we should move it from treasury bills to buy stocks. So keep up with your investment advisors, keep up with your company, talk to them. And I can assure you one best way to make wealth is through investment. Active investment.
Active investment.
Yes.
Where you have someone you are talking to monitor your investments, right?
Yes. Right. Recently, I received a call from a client from the US who was asking that he has seen that the gold coin is doing well, and it was inaugurated in November last year, and then somewhere last month, it rose up at 16%. So the first ounce, the 1 ounce, came into the market at 44,000.
Yeah.
The half ounce was 22,000. The quarter ounce was 11,000. And as at last month, it was around the first ounce, the 1 ounce was around 56,000.
Wow.
So if you bought at 44 and now 56, if you sell, you know how much you could get back. So he wanted to get into gold, and then he asked me which one he should go for. I asked him to go for the 1 ounce. And recently, as we speak, it has come down. The price has come down. So it's a good time to buy because it's a very good prospect. That is if you have the long-term mindset.
The long-term mindset.
Yeah.
Thank you very much, Mr. Hagan. It's been wonderful. I wish we could go on and on because it's been so insightful. Thank you so much for sharing.
You're welcome.
But any last words for our listeners, please?
Oh yes, I'll go back to the quote we started with.
Okay, right.
That I want us all to have the rich mindset.
The rich mindset.
And it's possible you can have the rich mindset where every money you get before you spend, make sure, ask yourself, where this money is going. Will it bring me back something? You are buying airtime. What is the airtime for? Will it bring me back something? You are buying a dress. Will it bring me back something? Make sure where your monies are going is something or a place that will bring you back something. That's what we call a rich mindset. Thank you.
Thank you very much, Mr. Hagan. We truly appreciate your wisdom. So, personally, my major takeaway was that one of the active ways to build your wealth is through investment, and not just leaving it there, but ensuring that someone is checking on it and then updating you on how your investment is doing. I hope you've learned a lot today. Please do well to watch the video again. Even though you've watched it, I know you have to take time and watch it again because he said a lot of things about investment that I think are very, very helpful to you. So thank you very much for joining us today. We really appreciate you. Do well to subscribe to our channel. We are Africa Street MBA on all social media handles, LinkedIn, Twitter, and Instagram. And please stay tuned for more.